Hi everyone, my name is Mikey. This is Tyler, and we're the founders of Innovative Start organization. Innovative Starts, also known as ISO, teaches financial literacy um, with the vision to inform and not persuade. So, a lot of things we'll talk about cover a broad range of topics, from the basic budgeting and such to economic policies and the works. So today we'll have a couple topics for you, talking about a wide range of things, of course, again. But yeah, we'll jump right into it. With the first topic being on here is just talking about um, some more, I guess, aspects of your net worth, what it is, how do you come up with it, who comes up with it. Um, but yeah, I think a lot of times when people associate net worth with stuff, you only hear that like millionaires and billionaires, but you too, as the average Joe, have a net worth. So, um, yeah, I think it's simple what goes into it, but I'm gonna pass it to Tyler to, get stuff started.
Yeah, so net worth is just a fancy word of saying whatever your assets are, like things, and this is where it's kind of opinionated as well, so I'm sure you can go back and forth, but an asset being like your house
Hmm.
or stocks, any type of investment, gold, land, things like that, and then you subtract your liabilities or your things that you owe. So that may be like your debt on a car, on the house, any other debt or things that are essentially leaving, I guess for lack of better words, leaving your bank account, if that makes sense.
Hmm.
So net worth, I think I think it's important because it's it tracks how much you're worth over time, and then also I think it's important to track your investments and making sure you're allocating in the correct way and trying to beat the market, things like that, or um, stay at pace with the market.
Yeah.
But it's really important to have a low to debt income ratio, in my opinion,
Hmm.
and that'll obviously increase your net worth as well. Mikey, what are you thinking?
I think for net worth, like overall, what you can also look at too is liquidity. So a lot of times when you see some people with like a lot of money and then you equate that to their net worth, it's not always meaning that it's a liquidable amount as far as like what their net worth is. So those billionaires that you see, a lot of billionaires or whatever, right? Their net worth is tied to stocks, which is liquidable, but also like volatile as far as like it can change. So that's why, like, if they have a heavy investment in their business, so say they have a large ownership of stocks or shares, right, and they take a hit, they'll lose billions. That's a change in their net worth. But that's an asset in reality. It's not cash on hand, right? So you can equate your income that you get from your job as part of your net worth because that's the more linkable part of it. So you can say, oh, like, yeah, I get paid $100,000 a year, or I get paid $40,000 a year, or whatever it is, right? Not only is that included, but then you also include, do you have any retirement plans? So your 401k, Roth IRA, those are included into your net worth. And at the time of, where it's at, because obviously those are tied to the stock market as well, that can fluctuate as far as your net worth. Maybe we're in a downturn as far as that goes, so your net worth's down to $3,000, or maybe your net worth's up for $5,000. Um, and then liabilities also count, right? Um, what comes with a liability is an asset. You have both in that sense. A loan is a liability in its own sense, but it also the asset it creates is cash, right? So the same thing as, you got your home loan, your asset is that house, right? That's a part of your net worth. Um, Other aspects, I would say your car, any I guess larger assets, so car, house, Is there any other things that I'm missing? I think those are probably like the most common that people will probably have. Your apartment is not included because you don't actually own that. But whatever you have ownership in is going to count within your net worth. Um, yeah, like or like say, hey, you have like a patent or something on a certain item or whatever, and it holds some type of value that can be included into your net worth. So like, yeah, assets and take like in different varieties and forms your business. You have a side business that's a part of your net worth, especially if you have whatever percentage ownership of that business. That percentage is part of your net worth, the same way a billionaire has stocks in a company that's their net worth. Yeah. So, um, not only does it work for those billionaires, but like I said, it works for you personally as well. Um, your overall net worth or like whatever that is can determine what type of loans you can get, right? So if you go to a loan officer and you're getting ready to start a business, you need a loan for this, or you're getting ready to buy your first home, second, third home, whatever it is, rental property, whatever that possibility is, right? They're going to say, okay, what kind of assets that you have. They're not asking that to see how much you're worth. They want to know if you have enough money for collateral, because if you don't pay that stuff, that's where they're going to reach in to say like, hey, okay, we'll take this and this and this to pay off your debts. But that's a whole nother story. So, um, yeah, I think it's good to know like what plays its part into your net worth. And then understanding the difference between, a liquidable part of your net worth and then the non or like what's not quickly accessible.
Yeah. Well,
So yeah, I think people get
yeah.
that
Explain
confused. Yeah. Because a lot of people be like,
explain.
"Oh, you got billions of dollars," and I'm like, they actually don't, right? If we're talking about actual cash on hand, and that's another thing too, what I was just talking about, like people leverage their net worth to get other items or assets, right? Because if your home is $250,000, right, and you don't have $250,000 cash, to get that loan, you have to leverage some other part or some other asset or whatever, right? And that's a loan in a sense too, right? You get your loan payment terms or whatever, but you also have to have some type of asset collateral. That's why like bankruptcies and all of that stuff, like that people thought that's a whole other stories, but like you really have to understand that because then you can understand like the sense of it's being ignorant, saying like, "Oh, these people got all this money," because a lot of times people might not have no money; they just own stuff. So, um, I think ownership is good, but also you could be a very poor person that owns a lot of stuff, if that makes sense. So yeah, that's just my little think piece on it to help you understand. I don't know, Tyler, do you have anything to add to that as far as like that work? Yeah,
Oh, that was really good.
I
I
think
think
it's
it's important to track it.
I think it's like it's simple to understand. Once you do, you can understand like why a billionaire can't just hand everybody $1,000 because obviously don't have access to that actual billions of dollars. Like, let's be realistic, right? Now they might have millions because they get dividends from that stock or they have a salary that they get from their company, right? Accessible cash. Now you can view them on that standpoint. So whenever you say, "Oh, what's the net worth for so and so," right? Let's go look at how much cash they actually has. Go say, "Oh, what's this person's salary or whatever bonus, yada yada." And then you can say, "Oh, they actually get only 100,000 a year, or they only actually get 50,000 a year." Then we don't want to talk about taxes that get put in there and yada yada. That's another thing too. Why people probably get assets is to help their tax situation on a year-round basis. So um, another thing. It's crazy. Like I said, net worth, and then you got all these branches that trickled into it or away from it or whatever that needs prior knowledge. But like I said, from a simple point of view, just to wrap up on it, um, you have your liquid side of your net worth and your non-liquidable side of your net worth. Um, we're thinking like cash on hand, salary, any money that you can get access to quickly that you can go to the ATM and withdraw, right? And then you have your assets, slash liabilities, net worth, right? That's your house, your car, or whatever, other asset that you own that gets included into your net worth, right? So last example essentially is if I have a $20,000 car, and it has to be, I guess, at market value, right? It's not at what I bought it at, obviously, because there's the other part of owning any type of house, car, or asset is that its appreciation doesn't do that. It's going to depreciate over time, right? Because there's going to be new cars that come out, or you used it, so it's no longer new. So yes, you add that depreciation into it. That's what that market value gets you at. So my car at market value is $20,000. My house in the current market, it's $450,000, right? Throw those two numbers together. My non-liquidable net worth is $470,000, right? Now, with that being said, I can only be making, maybe 60, $70,000 a year. That's my liquidable part. Does that mean I'm some half millionaire? No. That just means that I have some assets that I could leverage if I wanted to get some other assets. Well, that's how people with a lot of money move and work and how they can keep up. They don't really have like yeah. That's like I said, that's another big thing that people don't understand. But that's a whole tangent that we could get into another time. I do want to roll over into our next topic, talking about some of the AI used in personal finance applications, and if some of our viewers that see this, if you do use anything, what is it that you use? Any recommendations? I think AI, as far as like its usage within any type of financial matter, um, there's more of a data standpoint. So it takes that user's data, whether that's your bank, your card, your expenses that you have on a monthly basis, yearly basis, right? And it can aggregate that for you and tell you, some assumptions based on any external factors, right? Something that's going on in the economy or whatever else. And then also internal, what are you spending? How much money are you bringing in? Is there a difference in your paychecks? Why? And explain some of those items to you. Almost like basically like if you were to have a financial planner in your pocket. Um, it provides convenience at a cheaper price, right? And then you can have it all year round at any point. I think that's really kind of also the point of the AI usage, and which is really good use of it, right? It doesn't necessarily eliminate, a job in particular, but it gives you a better grasp on your own personal finances and then budgeting, which is important, which a lot of people say, oh, yeah, general sense yeah, I know how to budget, but in reality, you don't, right? Because you're not breaking out line items. And that's what the AI is doing for you. So maybe the AI tool can be like, oh, yeah, hey, gas prices, due to a higher, demand because it's summer, people are traveling, they're going to be up. It looks like you spend this much on gas or whatever. Let's look at, what your commutes or what your transportation costs are going to look like, or you're going to expect to have an increase in your transportation costs. Those are some tools out there. Obviously, we are not biased to any certain tools or whatever, and obviously you can do your own research on what tools kind of work. I know some of the most common ones that you probably heard of or seen, advertisements for is Mint. I think that's one of the biggest ones that are out there. I've seen some advertisements for Pocket Guard. Most of your financial apps have some type of AI influence within it too. Whether it's just outright like a tool that you can use or it's something that's just already built within the system that they already have. Um, but yeah, and most of your banking institutions are using AI, whether it's like the chat bot that they have in there or whatever it is to help you, do whatever financial forecast, calculate a loan or whatever it is. So I think we're at the early stages of, its use in personal finance. But yeah, that's kind of my thoughts on it. What about you, Tyler?
Yeah, I think it's all interesting. I mean, what was it like Google's like video player thing just came out? I don't know if you saw that. That was like yesterday or the day before, like something crazy. It's like looks like real world videos. So AI is just going nuts.
Hmm.
I I saw someone like an investor type of person I follow. His name's Anthony Pompliano. He started this essentially like an AI. It's basically called like a personal. The way that he pitches it is called a personal CFO, like Chief Financial Officer. I think it's CFOsylvia.com, something like that. Essentially, like it just tracks your net worth and all of your assets for you, and you can, I think, text it or go on their platform and ask the questions of where your net worth is, your assets are during that day, and it'll build out a full presentation of like your assets and things like that for you. I thought that was pretty cool. But yeah, I think definitely there's a way to utilize all of these and figure out how to, like, going off of net worth, like we were just talking about, how to calculate that, what to do in the future, things you can do. And then whenever the going gets tough, right? It's just mundane investing over time, looking back on your net worth and seeing how hard you've built, how hard you've been working, and hopefully over time your net worth has continued to go up. Just a good reminder to keep doing what you're doing.
Yeah. Um, and with that too, like, you know, if you continue to do the same thing and get the same result, obviously you need to switch it up. So, um, but if you 1% is all you need, right? 1% every day. And that holds true because in our last conversation that we had where we talked about compound interest, that's essentially what it is. And 1% compounding over time is going to be, a tremendous difference from a day one of 365 to, day 365 of 365, right? That growth that you're going to have is going to be completely different versus you getting, a 0% growth every single time. And the things that you do as far as like your financial planning. Um, I think an interesting, tidbit out there too is that on average, a U.S. adult, um, essentially between 1,400 to almost like $1,700, right? Per year, they're losing out on just being financially illiterate. So it's extremely important to understand basic financial concepts so that that amount doesn't apply to you. And then you can't just let it stop there. You need to teach those around you to make sure that they understand those impacts too. Um, a lot of times, like, some people got it, right? They'll understand it, they know how to apply it, or they'll have some background, mom, pop, whoever it is, say, hey, you need to handle your money better. Here's the mistakes I made. This is what you need to do. This is how we get you ahead, right? Other people, they like, hey, I got that cash in my hand, it's out of my hand. So, just better get a grasp. And a lot of people are gonna be stubborn to it. I think the worst things I always used to hear is like, I can't take the money when I die. And I'm like, yeah, but you're gonna torture yourself, you know, throughout your whole life trying to climb it, this mountain that you created of debt and financial, misfortune, just because of that mentality. So it's a quick little grind in reality in terms of your full life, right? Those pieces that you add in for 5 to 10 years or whatever can set you up to where you don't have to be doing that for 20, 30, 40 years. Like that's the big difference, right? A lot of people are like, oh, I don't want to. Just stop making excuses for yourself and make the excuse that you need to get it done. Yeah. But yeah, so that moves us into the thing that I just talked about as far as like some supply and demand stuff with the AI tools, but just overall, like in different aspects that you can see supply and demand work in, right? One of the, I think, most crucial supply and demand things that happen year round, and I just use it as an example, is gas prices, right? Um, a lot of people are always confused and mistaken on how a gas price is determined. Um, if you're financially literate, you'll probably blame it on whatever current administration's in office, or whatever it is, right? It becomes a political think piece. In reality, it's an economic tool that's being, used throughout the year. And then other things that play in part as far as like what your gas price is like where's your gas coming from? Um, how much refinery needs to be done before it gets to the pump and then into your car. A lot of high density populated areas or, you know, as far as like a more urban part of a city, right? Your gas prices might be higher because there's a lot more traffic, meaning that you need to have a more refined product so that your CO2 emissions are a lot less because you have more cars on the road. Other parts that might not be the case. You're in, rural, there's farms back to back to back to back to back. You might have cheaper gas prices because there's not a lot of things that go into there. That's just one factor, right? But then when we look at the main one, which is that supply and demand, is that yes, in that rural town is gonna probably be cheaper because you don't got a lot of people filling it up, right? So you want to make sure the people that are coming to fill it up, they can get those gas prices, and that's that. That's why when you go to, Timbuktu, you're like, wow, I just came out the city. I'm over here. Gas is, 40, 50 cents cheaper. That's crazy. It's like, yeah, it's because it's probably not a high demand over there. So, and things fluctuate. So, as a U.S. as a whole, right? Winter versus summer. Winter, there's snow and stuff and or ice or whatever in most parts. Commutes change. Um, or you can just look at like, you know, whole economic, uh, or would you say like more global impact too? So the pandemic, right? People weren't driving because you couldn't go anywhere or go into any store or whatever because most things were, a capacity or certain times or limits as far as that goes. So you're not traveling, you're at home. So then gas prices went down because there was no demand for it. And the supply that was already there had already been put into these gas um, prices or whatever. So you just saw them kind of dwindle down over the pandemic. And then once the pandemic ended and people were back driving and getting back out there, especially in the summer kind of setting, right, where demand is high, people are going, traveling. Gas prices are going to get up because there's a higher demand. You're going to decrease that supply. Therefore, making sure that, whoever, because what you going to do? Not put gas in your car? That's what people always say, like, what I'm going to do. Not put gas in my car. So, yeah. But that's just one thing. Tyler, you got any, like any examples of supply and demand outside of like gas prices? I know there's probably like a few, but that's like I said, that's one of the bigger ones.
Yeah, like the toilet paper during COVID,
Oh,
like there's a large demand, right?
yeah,
A pretty practical one.
yeah.
From an economic perspective, like the bond market is really interesting. If there's a lot of demand for the United States Treasury bonds, the bond yield decreases. But when there's not a lot of demand for the United States Treasury bonds, the interest rate or the yield, however you want to, whatever you want to call it,
Mhm.
increases. So it's very interesting to say the least. Also, like trucks, we saw the like used cars and like during COVID, that was crazy. I'm seeing videos all over Twitter, Mike. I'm not sure if you've seen or like Instagram reels where people are like, um, they bought a car during the COVID craze and now they're underwater for their car. Or another way of saying is like they owe more on their car than it's worth because they bought it at a super high price during COVID whenever there was a
Also
bunch
known
of
as a
people.
premium, as like our
Exactly.
financial term. So yeah, what Tyler just described is you buying something at a premium, right? And when you buy stuff at a premium, that means you're paying over the market price for it. Um, and that's what, like I was saying, as a lot of people did, is that a lot of those vehicles they overpaid for, and now when the market or whatever corrects itself or restabilizes, now you just overbought something, right? Because you agreed to those financial terms, and you can, I mean, most places you can, whenever you get into those type of contractual agreements, you can renegotiate. But that's still money lost, right? You'll never get that back because you bought that at that premium. Um, but yeah, that's a little term of the day, okay? But yeah, finish what you're saying, Tyler.
No, that's just. it's just interesting. Like if there's a lot of demand for, sorry, I got the dog. Um, like if there's a lot of demand for a product and it's going hot, like think about the baseball cards, right? Like
Mhm.
there's only s- there's only a certain amount of baseball cards or whatever sport, those will go higher. Like the Supreme clothing is a good example too.
Mhm.
So anyway, that's all I have to say for supply and demand.
Yeah, it's in everything. Like I'll put it like this, right? Because I'm gonna hit closer more to some of the TikTok people. Whenever you see a TikTok trend, especially for the TikTok girlies and whatever makeup products and all that stuff, right? And then you go to the store and it's completely gone, and then it gets restocked, and you're like, dang, what just happened to the price, right? That is right there, supply and demand. The demand went up for that, and whoever that business owner is or whatever for that product that just blew up, they're like, okay, right? People want this product, and it flew off the shelf. We don't have the supply anymore for that, right? So what we'll do is that for those people who really, really want it, we'll increase it just a little bit, right? Because there's a high demand for it, and they're gonna pay that price. Um, there's more terms for that too, what I just described, as far as like whenever you're talking about elasticity. I think that's the term for it. And inelasticity and elasticity when it comes to price points. You have to look more into that. I know my econ professor would be proud of me for using those words. I can't believe I just remembered that. But yeah, so uh, those are things that you look at whenever you like cheaper price, because like there are certain products, right? They can raise the price, and what are you gonna do? Hashtag gas, right? There are certain products they raise the price, and you're gonna be like, I can find a dupe or something like that. I'm not paying the price for that, right? That can be like just clothing brands in its entirety, or water bottles. Bam, let's think about that too. Stanleys and Yetis and Opal or whoever knows. Every time I look up, there's a new water bottle brand, right? You as like the Stanleys, whenever the lady's car caught on fire and the Stanley was the only thing, the demand for them shot up, right? The price for that for Stanleys, I guarantee you did not stay the same. They'll trickle it up, right? You're not gonna, as a consumer, unless you're like somebody who's like very price savvy, you're not seeing that as far as that goes. Um, yeah. Look at like fast food joints too. Hey, if you come in to get, you know, in the morning and you get your breakfast platter or whatever fast food restaurant, some of them will cut you a deal, right? So you come get your 2 for $5 or whatever, right? But I guarantee you, if you try to go get a McDouble, McChicken, right? Those used to be dollar menu items. That's not a dollar.
RIP
Right.
to the
All right.
McChicken.
R big RIP. So yeah, so it's like those are things that you need to like look at. You're like, huh. Obviously there's other things outside of supply and demand that impacted the price of that food item, right? That could be other things that were, up into that end product that gets to that, right? But I say the same thing with like Canes too. That box combo I used to buy, it didn't change like $4 or $5 since when I used to eat it all the time and like high school or freshman year up until me as a grown adult eating it. I'm like, yeah, let me get the box combo. And they be like, yeah, that's, I'm like, huh? So like, you talking about the same? I'm like, did I say the right thing? Let me look at the menu one more time. Yeah, the four chicken combo, yep. Oh, crazy. I don't need no drink. You just give me whatever else. But yeah, I think it's interesting when you look at like I said, supply and demand as a whole. And like I said, if you are a young entrepreneur, right? Say you have some type of product you're selling on Etsy or whatever, a lot of the times businesses like to stay within trends so that they can also catch some of that market and catch some of that the supply and demand parts of that product, right? AI right now is the big ticket, right? Every business or whatever corporate how can we incorporate AI? Are we using AI tools? What new AI tools are out there for us to incorporate and make sure that we're keeping steady with that? And then as a business person creating an AI tool, how are you creating some type of convenience or within a market push, right? Um, Say it's a makeup product, right? Oh my gosh, girl, this thing is removing my wrinkles, yada yada, right? And she's like, hey, I need that too. And then you're like, hey, Maybelline's like old girl who's making, makeup products out of her little hometown, kitchen or whatever. They got a wrinkle cream. We got a wrinkle cream, but we need to maybe change some marketing or get in part of that demand. She's got a million, likes on a couple videos of her showing the de-aging process essentially. So those are supply and demand things. The demand can change any type of a song. I mean, we can get into that too. A song might not be popular or whatever. They get on TikTok, somebody do something with it. Now it's a million people. Hey, now that song went up, and now the price for that musician to perform that song went up. Bam, right? He's got an increased demand for his music. So that's a very simple financial tool, economic tool, can use in any, small or large part of business. But yeah, just look at it, right? And don't be duped, right? Do not be duped. Because a lot of times when, certain things come out and you didn't pay attention to those price points. If it's not on the shelf, best believe when it's back, you're not paying the same price. And what they, that term, yesterday's prices are not today's prices is going to be in full effect when you see that product is back on that shelf. So yeah, don't expect that, right? If I'm the kid selling lemonade at the corner, right, and they come and buying it up like it's, the most tastiest drink on the block, best believe tomorrow that lemonade cup is no longer gonna be 50 cents. It's gonna be 75 cents. It's gonna be $1. And people might complain about the prices, like, oh, look, man, it was just 50 cents yesterday. Like, hey, people really want this drink. So either you're gonna pay the 75 cents or you're gonna keep it pushing. And most times with those slight price changes, people are like, I'm thirsty. It is a hot summer day. I'll pay 75 cents. Right? And that's the elasticity part. Now, when you get to the inelasticity, that means like, oh, you go from 50 cents and then now you're charging at $2. People are like, hey, there's a gas station around the corner. I'm just gonna give me a cup of water or something like that. So, but yeah, those are some pieces on there. Any other think pieces you have, Tyler, as far as supply and demand?
Oh, that was good. Again, a lot of this information is on YouTube that you can learn, and I
Hmm.
highly recommend anyone. Um, I need to I need to go back and remind myself of a few things too, to be honest. But all this information's out there. It's just for the taking. We just got to make some time and learn more, to be honest with you.
Hmm.
We all have no excuses with the internet nowadays, to be very blunt.
Yeah, yeah. Well said. To be honest, I think
That's all.
I think people just, understand how to use the tools around you. That's it. Like, no reason that you should be getting behind as far as like understanding these concepts when there's so many tools around you. So, a lot of people like to say, "Oh, nobody told me that," or whatever. That's only valid to a certain standpoint, right? Because if it's something that was never made aware to you because you don't use it or it's something that impacts your life, that makes complete sense because why would you go and look up something that's not applicable to you? But for the things that are and you choose to, be unaware or not doing your own research, that is up to you as far as making those mistakes and then playing dumb to them, essentially. So, yeah, but that's all from me. Tyler, anything from you before we wrap up? All right, we
Nope.
appreciate it, guys. Make sure you like, subscribe, and comment on any parts of what we just talked about from those three different topics. Again, supply and demand, AI and personal finance, and also talking about net worth. If you have any, stories or solutions or whatever, please comment that below. But other than that, we'll catch you guys. See you.